Okay, so we've all felt it, right? That moment when you realize your crypto portfolio is basically on a roller coaster and you're just along for the ride, white knuckles, hoping for the best.
Yeah, volatility is definitely a thing in the crypto world. No way around it. But the real question is, how do we handle that volatility? And honestly, that's where diversifying your portfolio comes in. We're actually using this cool article from KuCoin Learn as a jumping off point today to really dive into all that.
Makes sense because going all in on just one crypto, it's kind of scary, to be honest. It's like putting everything you have into this basket woven out of like hopes and dreams, and then you're just handing that basket to someone juggling chainsaws, you know?
Okay, I love that visual. But yeah, you're spot on. That's exactly why diversification is so important. Think of it like building a balanced breakfast, but for your investments. You're not going to just have a bowl of sugar and call it a day, right?
Right, gotta have something to balance out the sugar rush.
Exactly. You want some protein, healthy fats, maybe some fruit for good measure.
So, is Bitcoin like the sugary cereal in this metaphor? All that hype and energy, but maybe not enough to sustain you in the long run.
It's a simple way to put it, yeah. But you're getting the idea. Diversifying is like adding those other essential food groups to your crypto portfolio.
Hmm.
It's about being strategic, spreading your investments around to, hopefully lower your risk. I say hopefully because there are never any guarantees with investments.
Right. It's not about erasing risk completely because let's be real, that's impossible. It's more about managing it,
Yeah.
improving your chances of making it through those market crashes that always seem to pop up.
100%. And just like with making a balanced breakfast, there are different ways to diversify that crypto portfolio. Some are easier than others, like diversifying across different types of crypto.
So instead of just Bitcoin and Ethereum, you're talking about getting into all those altcoins out there. How do you even wrap your head around all of that? It's like a whole other language.
Yeah, it can definitely feel overwhelming. That's why it's so important to understand the why behind diversification. You see, different cryptos, they have different uses, different tech behind them, different things that give them value. So when you diversify, when you invest in a bunch of them, you're also diversifying how much you're exposed to the different parts of the crypto market.
Okay, that actually makes a lot of sense. So it's not just about spreading your money around. It's about understanding what you're actually investing in and how all those pieces fit into the big, complicated world of crypto. But what does that look like in reality? How can someone actually use this to build their own portfolio?
Well, one way is to look at what a cryptocurrency is actually used for. Like you could invest in something like Ripple, which is often used for international payments, and then balance that out with an investment in Ethereum, which, if you didn't know, is the base for a lot of those decentralized finance apps, DeFi for short.
So if you have Ripple and Ethereum, you're basically covering two different areas of crypto, right? That makes sense. But this KuCoin article also talks about diversifying by thinking about geography, and that's kind of throwing me off, to be honest. I mean, crypto is supposed to be all about no borders, right? So how does location even factor into all of this?
That's a good point, right? You'd think with a digital currency, physical location wouldn't really matter. But here's the thing. Different countries have different rules about crypto, different levels of how much people are actually using it, even just different attitudes towards it in general.
So you're saying that where a crypto project is based, or even just where it's being used the most, that can actually affect how much it's worth.
Exactly. A perfect example is Portugal. They've kind of become this crypto tax haven, which is obviously a big draw for some investors.
Yeah, less taxes, more money for you, right? And then there's El Salvador. They went all in on Bitcoin, remember? Even trying to create that whole Bitcoin city thing. Talk about a bold move.
Totally. And whether or not that whole experiment actually works out, it just shows how much of an impact a government can have on crypto. So when you're thinking about geography and diversification, it could mean checking out countries with crypto-friendly regulations or places where lots of people are starting to use crypto, even specific projects that are tied to a certain location. It's another layer of possibility for sure, but also another layer of research you got to do.
Right, got to weigh the risks and the rewards. And those risks are probably even bigger when you're dealing with different countries, each with their own like political stuff and economic situations.
You got it. You ready for another curveball in the world of crypto diversification?
Hit me with it. The more unusual, the better.
All right, let's talk about time diversification.
Time diversification. Okay, now we're
Yeah,
getting into like Back to the Future territory. Does this involve a DeLorean?
I wish. That would definitely make this whole thing a lot more fun, haha. But basically, time diversification is spreading your investments out over, well, time. Instead of putting all your money in at once, you buy a little at a time at certain intervals.
So instead of trying to time the market perfectly, which good luck with that, it's impossible. You're basically saying, okay, I'm just going to invest consistently. So you're buying when it's low, buying when it's high.
Mm.
And hopefully things just balance out in the end, right?
Exactly. And that way, the ups and downs of the market don't hit you as hard. Imagine investing a big chunk of money right before a crash. You're buying high and potentially losing big. But if you're investing consistently, you're getting different price points along the way, some high, some low, and hopefully evening out to something more stable.
So it's like dollar cost averaging, but for crypto. Sounds like that strategy takes a lot of patience.
It definitely does. It's a long game, for sure. And it goes back to what we were talking about before about volatility. Time diversification can be super useful for riding out those crypto waves.
Okay, I'm starting to see how all these pieces fit together. But there's one more thing from this KuCoin article I want to get to. They talk about looking beyond just Bitcoin and Ethereum to diversify. And yeah, I get that those are the big names, but why is it so important to look beyond just those two? It's like we've been talking about this awesome crypto breakfast, right? With all the good stuff, super diversified. But so far we've only got like Bitcoin cereal and Ethereum toast. What else
Yeah.
can we add to this thing?
I love where you're going with this. Yeah, Bitcoin and Ethereum, those are like the staples, the foundation.
Yeah.
But you wouldn't want to eat only cereal and toast every single day, right? Your portfolio
Yeah.
needs more than that to really do well long term.
Yeah.
That's where all these other crypto asset classes come in.
The article mentioned utility tokens and NFTs. And I get NFTs, kind of. I've even tried to buy some digital art before. But utility tokens, I'm not going to lie, those are still a bit of a mystery.
They're key, though, especially for a well-diversified portfolio. Think of a utility token like a key that unlocks extra stuff, special features or services on a certain blockchain platform. It's not just about how much they're worth, they have real uses.
Okay, so walk me through it. How does that utility actually work in the real world?
Let's talk about Basic Attention Token, or BAT. You familiar with the Brave browser?
Yeah, vaguely. It's
Yeah.
the one that's like really big on privacy.
Right. That's it. So BAT is built into Brave. When you use Brave and you decide to see their ads, the ones that respect your privacy, you get rewarded with BAT. And you can use those tokens to like support content creators you like, tip websites. You can even trade them for other cryptocurrencies.
Wow, so it's like this whole little economy, and it all runs on a web browser? That's crazy.
Exactly. And that's just one example. There's Golem, too, GLM. That one lets you share how much power your computer has on this decentralized network. Or Filecoin FIL, which is used for, you guessed it, decentralized file storage. So when you're investing in these utility tokens, you're not just betting on the price going up. You're investing in the whole platform behind it and whether or not people actually use it.
Okay, I see how that adds another dimension to diversification. So if one part of the crypto world isn't doing so hot, your investments in those other areas, the ones with different utilities, might not be affected as much.
Exactly. And the best part is, by diversifying across all these different sectors and uses, you're way more likely to find those hidden gems, those projects that could really take off.
It's like having a stock portfolio, but instead of companies, we're talking about all these cutting-edge blockchain projects, like global potential.
And that brings us to something super important, especially with crypto. This market is fast, it's unpredictable. Remember all that volatility we talked about? That means staying up to date, knowing what's happening, and changing your strategy when you need to, it's essential.
So diversification isn't something you can just set up and forget about.
Nope, not at all. You have to keep researching, learning about the market, what's trending, and yeah, sometimes even rebalancing your portfolio.
You've mentioned rebalancing a few times now, and I gotta ask, what does that even mean for crypto?
Okay, so remember that balanced crypto breakfast we were talking about?
Mm.
Over time, some parts of it might get bigger, some smaller. Just depends on how the market's doing. Rebalancing is like readjusting everything, getting back to those proportions you want. So you can keep the level of risk you're comfortable with and stay diversified.
So it's about selling off some of what you have if it's grown too much, and then maybe buying more of something else that seems like it's got potential.
Exactly. It's about making sure your portfolio still matches your goals, your risk tolerance,
Hmm.
even though the crypto world is always changing.
This has been amazing, honestly. Before we wrap up, I want to leave our listeners with something to think about. We've covered a ton today, from the different ways to diversify using different cryptocurrencies, to exploring all these utility tokens, and even time diversification. If you had to pick just one of these strategies to really focus on, which would it be and why?
It's a journey for sure, and every investor has to find their own way. But no matter what path you choose, remember how powerful diversification is. It's about building a portfolio that's strong, that can handle anything, and come out even stronger on the other side.
And on that note, I think that's a wrap for this deep dive into crypto portfolio diversification. Until next time, everyone, happy investing.